Finally, it's Friday. I'm back this week with the third episode of the November Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company.
Angel alert! Morgan Mania is coming to San Jose on Friday, December 2nd. Network with top originators and agents, and I'll show you why Jason Oppenheim of Selling Sunset is calling Morgan a true game changer in real estate. Everyone is falling in love with Morgan. And when you see how this technology will transform your life, you will too. It's Morgan Mania. I can't wait to see you on December 2nd at Sophie's Mediterranean Grill in San Jose. The event's free, but space is limited, so register today at swmc.com/mania. See you there.
So last week was one of the biggest gainers as well as greener weeks for stocks and bonds in a while. So before diving in this week's update, let me give you a sneak peek of last week. Remember how the U.S. October CPI came out softer than expected? The midterm election provided the scenarios preferred by markets and how China eased some COVID controls on Friday? All this added to a sense of positive change in the markets. But let's see if this rare kind of optimism continues this week as well, or if we have something contrary. Treasuries were under pressure as U.S. trading got underway this week after a three-day holiday, erasing a portion of last Thursday's historic gains. Meanwhile, the dollar strengthened against all its major peers after Federal Reserve Governor Christopher Waller pushed back on bets that the U.S. Central Bank was nearing the end of its hiking cycle. So, we can say the nervousness did return to the markets. Well, let me tell you what else was underneath the surface this week. U.S. producer price growth stepped down in October by more than expected in the latest report, marking that the inflationary pressures are beginning to ease. The producer price index for final demand advanced 8% from a year ago, the smallest annual gain in more than a year, and 0.2% from a month earlier. Traders trimmed bets on aggressive Fed hikes after U.S. inflation was slower in October than economists forecast. Treasury yields also tumbled briefly and stocks surged amid optimism the Fed wouldn't need to increase rates as much as anticipated. However, that was proven to be short-lived. A measure of New York State manufacturing activity expanded in November for the first time in 4 months. The Federal Reserve Bank of New York's General Business Conditions Index climbed 13.6% to 4.5 in November. Investors are also looking to the gathering of world leaders at the Group of 20 Summit in Indonesia. U.S. President Joe Biden and Xi Jinping shook hands this Monday to kick off the first in-person meeting between the leaders of the U.S. and China since the pandemic began. The meet generated hopes of warmer ties between the two superpowers. It came after China had announced measures to support its injured property sector and to relax COVID curbs. Due to a weaker economic backdrop, the Organization of Petroleum Exporting Countries lowered estimates for the amount of crude it will need to pump this quarter by 520,000 barrels a day, following a similar-sized downgrade a month ago. This means that the supply cut of 2 million barrels a day was agreed by the group and its allies last month. The report drew fierce criticism from U.S. President Joe Biden. MBA mortgage applications index rose 2.7% in the week ending November 11th. Refinancing activity fell 1.6 after falling 3.5 in the previous week. The purchase index up 4.4 after rising 1.3 1 week earlier. So that's all we have for this week. Next week is Thanksgiving, so please enjoy the holiday season, and I'll see you back the following Friday in December. Please join me again for more market updates, figures of various important economic data, updated status on Fed's pathway, and much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Have an awesome weekend, friends. Buffy out.